Hey guys, my name is Bright, and today we'll be looking into top-down analysis. So guys, for this session, I'll be breaking down everything into 5 different steps. Now, the first step is this: you have to understand the overall picture of the single pair that you trade. The single pair I trade is GBP USD. And to trade intraday efficiently, you need to understand the story of what price is doing. You need to follow up every day with what price is doing. Now, to do this efficiently, you want to go on the monthly time frame. You want to analyze the entire monthly time frame to know what GBP USD has been doing over the years. So just in case your data feed doesn't have enough data, you can actually just check out FXCM data feed. They just updated their data feed recently, and you can check out IDC too, whichever one. So they have data sort of up to 1971. So you could just analyze the entire monthly time frame to see what price is doing currently. Now, just for those that don't know, on the monthly time frame, one candle represents a month. On the weekly, it represents a week. On the daily, one candle represents a day. So there's not really much to see here on the monthly time frame, except the fact that price just grabbed it just tested this monthly low. It grabbed liquidity from this monthly low. Let me zoom in so you can see how price grabbed liquidity from this monthly low. That's the main thing to see on this monthly time frame. So we're going to head down to the weekly time frame. So guys, this is the weekly time frame, and right here one candle represents 1 week. So we can see how this particular week has closed after grabbing liquidity from this low. So this week is closing kind of bullish, showing us bullish momentum. Let's head down to the daily to see what price is doing. So guys, the way I handle this is this: at the beginning of every week, I hop onto the weekly time frame to know how the past week closed. At the beginning of every month, I hop onto the monthly time frame to know how the past month's candle closed, and also at the beginning of every day, I want to see how the past day's candle closed. This actually gives you a hint on whether price might be bullish or price might be bearish. You just want to have a strong idea of what price is doing. Currently, what we are looking at is the daily time frame, and we can see how price is rejecting after grabbing liquidity from this previous month's low, not the previous month's low, but just a monthly low. Now we want to head to the 4 hour time frame, 1 hour time frame, and just lower time frame. So you see the way I approach them, just one after the other. So this is the 4 hours time frame, and from the 4 hours time frame is actually where things actually get a little bit interesting, because now you can actually see the bigger picture of what price is doing. Now, aside the monthly low that price grabbed, price also grabbed liquidity from this particular low. Now we can see these lows where liquidity got swept, and also prior to that, price grabbed liquidity from this high. So what price simply did here is just to trick people into getting in on buy trade. Now price broke above this high to actually make people get in on buy positions down here. Now this here is what a lot of people refer to as a break of structure, and around when price was here, this was a demand level. So around here, price induced people to get in on trades here, and you can see this reaction here before price swept every liquidity just right below it. So having a good understanding of this at the back of your mind, it gives you a clear picture of what you are looking for going forward. Now for me, the way I approach this is this: I actually just mark out the candle that grabbed liquidity. I want to know that on the higher time frame, this actually contains money. I refer to this as a contained price because it contains money in it. So guys, this is the 1 hour time frame. Now from the 4 hours time frame previously, I was explaining the ideology behind what price did. Now this on its own is some form of structural / intention analysis. It's just you understanding what structure is doing and understanding the intentions behind it. Now back to the 1 hour time frame, we actually have the sell to buy candle that grabbed liquidity. This sell to buy candle here that grab liquidity. So now we want to understand what is price doing currently and how can we get in on a trade based off this. So guys, I actually skipped a step I think I should have mentioned, and that step is identifying your liquidity. So I mentioned earlier that price grab liquidity from this low and also grab liquidity from somewhere here. Now you need to understand, for you to know where liquidity is, you need to understand the ideology of the market. You need to know how people think, where people are trading at, and where the market can most likely target. Around here, there was a lot of liquidity above here. People traded the sell to the downside, and a number of people are also looking to sell as price is pushing higher. People are looking to draw their Fibonacci to take trades within here. Some smart money traders are looking to actually sell from this particular level, whereas a lot of stop losses are just lying above this place. Now down here to the same thing happened. When we have this push to the upside, a lot of people were looking to buy, and price will definitely just give you a reason to want to keep buying. So after getting this push to the upside, this is extra confirmation for people to buy more, and that's where we had this rejection to the upside. So this year has triggered a lot of people to want to buy more into this market, and now everything has become liquidity. A lot of liquidity are lying down below here. Now the same thing applies here too. We had this push to the upside, which is definitely going to trigger people to want to buy down here. Now buying down here is not a bad thing to do. I'm going to explain further. If you want to buy down here, you need to actually wait for extra price confirmation. Now currently we can see how price has currently grabbed liquidity, and now this brings me down to my fourth point, which is POI marking. So on the 15 minutes time frame currently, we want to understand where is our point of interest. Now previously I explained now about the fact that price induced people to buying around here. Now this push up has made people consider buying down here. So now a lot of people want to buy here, making this a valid POI, because this particular level people tried buying, but price instead invalidated every order. Now from here too, we actually got a reaction from here, which was this push down, and I believe that's where price is currently. So this here is my first POI, and also one other POI too is this place down here. So these are two main POI, but for some reason or the other, this particular low is something price will most likely look to protect. So most times you'd hardly get price coming down to this place. So price likes to trade above these levels because it's trying to protect this level. So based on this, you actually want to start looking down inside here to see if price gives you any confirmation that it wants to keep buying to the upside. And also guys, aside that, one other place I need you to pay attention to is actually this particular level up here. Now there are two things that could actually happen at this level. Now this level actually grabbed liquidity and also tapped into this particular order block up here, and we can see this push to the downside. Now based on intent, this level could be a trap, and at the same time it could actually be a reaction level. So this could be a POI and at the same time could be a trap. So you actually need to approach this level wisely and wait for every necessary confirmation. So for now guys, like focusing our attention here to lead me to the last point, which is entries. So for the lower timeframe entries, I'm majorly on the 5 minutes time frame. Now what can I see here? I can see this particular push that grabbed liquidity from here, and now one other thing I can notice is how price is currently engineering liquidity. So it's one thing you need to pay attention to. Now the question is, why is price engineering this liquidity? It is for one single reason. Price most likely wants to trick people into buying around here, so it will grab every stop loss then move in the intended direction. Now as you can see, we have this, and now for this reason I can simply have my trade entry somewhere down here. Now I'll come to 1 minute to check for the level to have my trade entry now. So guys, for this trade you actually want to have your entry somewhere here, and for your stop loss, down here will be the safest place to have your stop loss, because at times price can still come as low as this. So just take out as much people as possible. So try as much as possible not to be greedy with your stop loss, and if you feel the stop loss is too much, you can just put it down here as well. So with this, now we have this liquidity engineered and price coming to grab it, so we want to see what price will do next. So now guys, for the target, now there are different ways you can target it. You can target the next potential reaction point, or you can target the liquidity. For me personally, I love targeting the liquidity because I can see that price also built liquidity here. So for my TP1, I can actually target here, or just better still, you can just target the entire thing depending on your risk to reward for this particular trade. Now don't forget our intention for this particular zone. If price comes up there and gives us a reaction, we are actually looking to also sell from there. So you could notice how price came very close to this level. So if you're not careful, price could have taken you out of this trade. So it turns out this was actually the next day, and now for this particular new day, this is the previous day's high and this is the previous day's low. Now the psychology behind this is simple. Now the price has broken this particular structure, a number of people are looking to sell from this particular zone up here, and now it will actually be the main target for price because a lot of liquidity are lying above it. So you might also want to target that place, but at the same time, just be careful of the zone. So this is just a very simple top-down analysis in 5 easy steps. So you really just want to understand the intention of price rather than seeing it as a pattern. You want to understand where are people trading, what is price doing, and where can price most likely just go to. So these are the things I look out for when I do my top-down analysis. So guys, I hope you enjoyed this video, and if you did, do well to smash the like and subscribe button. And also if you have questions, if you have comments, you can just drop them in the comment box, or you could just buzz me on Instagram at algo.vibes or on Telegram at the algo vibes. You could also check my link tree on my Instagram bio for the link to my public channel. So that will be the end of this video, guys. Take care.